Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was June 2022. First, I just want to say I'm very proud to announce that Providence Property Group is a finalist in the Local Business Awards for the city suburbs in the real estate category. And we want to thank all of our clients and business partners who voted for us. We at Providence, we truly appreciate your business. We are so grateful for the trust that you placed in us. Your appreciation of our services, your ongoing referrals to our company, they mean a lot to us and our national team. And we look forward to another 14 years of helping first-time and experienced property buyers buy existing or new residential and commercial property all around Australia. Now, let's talk about interest rates. As expected, the Reserve Bank of Australia has lifted the official cash rate for the third straight month to address the high inflation rate brought on about by COVID-19 related disruptions to supply chains, the war in the Ukraine, and strong demand, which is putting pressure on the productivity capacity that we have here. Now, the RBA board noted that inflation in Australia is high, but they also said it's not as high as many other countries, which we already know that, so thanks for the heads up, Sherlock. But global factors are definitely accounting for much of the increase in inflation in Australia. We do have domestic factors that are also playing a role. So you've got strong demand, a tight labour market here, and capacity constraints in some sectors are definitely contributing to upwards pressure in prices. The RBA Governor, Philip Lowe, announced an increase on Tuesday, of another 50 basis points, 0.5%, which took us from a June cash rate of 0.85% to our new cash rate of 1.35%. Now, remember, the RBA has a cash rate target of 2%, but I would bet money that next month, the increase that they do is going to be less than 50 basis points, less than 0.5%. I would bet money on that. Now, what does this mean for property? It means the same thing that we saw in 2020, 2017, 14, 2008, and 2002, etc. People who are looking for an excuse not to buy a property, they're going to celebrate because they never wanted to buy property. They just felt that pressure. And now everyone else around them is telling them what they always wanted to hear, which is don't buy property now. People who need the market to crash because they've got no other possible way of getting in, they're going to cross their fingers or they're going to pray or whatever they need to do. But the smart buyers are going to take advantage of less competition, lower price points, and better negotiation advantages. Now, once the fear of Armageddon has worn off, just like it did by about September 2020, before the start of the second strongest property run in Australian recorded history, the masses will be back to buy, and those who waited will be kicking themselves just like they did last time. Now, we believe that most property will have a bit of a drop in value as an average. Remember, there's markets within markets. But if you have a long-term outlook on property, you will understand that while it's dropping, is actually one of the best times to be buying. I often ask people this question because I've been getting it a lot lately. People say to me, we're just going to wait. We're going to wait and see what happens. My question is, why would you put your buying plans on hold during what's now a buyer's market? Because you want to wait to get in when it goes back to a seller's market and you're going to open homes and inspections when there's 50, 60, 100 people there and the property's going for 100, 200, 300, 500 grand above reserve. That's the plan, is I'm going to wait for that market to come back for? No. Get in there while everyone else is scared and staying home. We bought some of the best properties we ever bought during 2020 because the media and the market was shouting to everybody to stay at home and that nuclear bombs were going off and we were going into this Armageddon style era. This is a rolling 3-month change in dwelling values of our state capitals, and we can see that the decline of the Sydney and Melbourne markets and a slight softening of Adelaide, Brisbane and Perth, and that's expected. We're definitely going to get some procrastination at the beginning when people start to see these interest rates go up, but again, that will all wear off and people will start to come back. Now, if you read this graph here, and feel free to pause the video and check it out, I've put some predictions as to what we believe the market's going to do, and I'll read through them. I think it's also interesting because if we look at the yields at the bottom here, which is the second last row, you can see gross yields in Sydney and Melbourne are at basically all-time lows, 2.7%, 2.9%. The average interest rate now is about 3.3%. Okay, so straight away for any investor or even an owner-occupier that thinks I'm in some trouble here, I need to maybe rent out my property and I'll rent a 1-bedroom or I'll rent a 2-bedroom or something like that, they're still going to struggle. So for a lot of investors, buying in Sydney and Melbourne is just not attractive as it used to be. And that's why we're starting to see those month-on-month and quarterly negative growth rates. Okay. For Sydney, we think maybe an 18 to 15% drop in price points, 10 to 15% in Melbourne. Brisbane's probably going to be positive 15 to 22%. Adelaide, similar, 15 to 25%. Perth, 8 to 12% up. Hobart, down 5 to 8%. Darwin, down 2 to 5%. And Canberra, positive 12 to 15%. Now, I can only say one thing here. Seek professional help. A Providence buyer's agent will help you save time, money, and reduce stress through a cocktail of data, experience, relationships, and local knowledge. We thrive in these type of markets. So if you want to buy, please call us. Just have a chat with us and we will tell you what's happening. Now, let's take a look at the winners and losers for the month that was June. Please remember that these numbers are based on averages. Don't forget, there are markets within markets, and we've seen better performers and worse performers. The latest Hedonic Home Value Index numbers show the top 3 growth capitals for the month were, no surprise, Adelaide, Brisbane, Perth. And like I said before, we expect that the trend for these second-tier capital cities is going to continue as they battle it out for the top spot for 2022. Who will it be? I also thought this was interesting. If you think that land sizes for new houses are getting smaller, you're 100% right. Australians are building houses on smaller blocks. And that's because our population's growing, so the density of certain areas is increasing. The average block size area of new house approvals actually decreased considerably over the last 10 calendar years by 64 square meters, which is basically the size of a decent sized 1-bedroom or a small, probably a Melbourne-based 2-bedroom unit. By about 13% it's dropped, whilst the average floor area has only decreased by about 3%. So houses haven't dropped that much. 3 square meters, which actually equates to only 1%. So houses haven't dropped that much, but land sizes have certainly dropped, which I think is interesting. Now, the biggest challenge for those of you that are smart and are going to keep buying property while everyone else is sticking their head in the sand, the issue you're going to have is finding product. And I'll say that the amount of new listings in Melbourne and Sydney, though, are actually the highest in the country at the moment. So there's probably going to be a lot more opportunities there. Obviously, a professional buyer's agent's going to have off-market opportunities and access to properties that aren't in the market, so that's why you need a buyer's agent. But the second-tier capitals, they're still pretty tight on stock at the moment as well. I definitely think you should let our professional buyer's agents help you. For almost 2 decades, Providence have helped Aussies locate, assess, and negotiate their ideal home or investment property Australia-wide. So stop procrastinating and contact us today. If you want to see more of us and see what we're doing in the markets, subscribe to our YouTube channel and like those videos. I want to thank you for your time today. We will see you next month.